the options Super Bowl. Tesla is trading double the number of options as the entire S&P. So we wanted to review this today because you've seen those wild swings in prices, and I believe that this is part of the explanation for what's going on. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We're in a place called Maximo Park, which is in the St. Petersburg area. I have a squirrel beneath me that has decided that they are going to get free food, which I'm not going to give them, but a little bit distracted by that. But needless to say, please note this is a copyrighted broadcast. Any use of the material presented is prohibited without written permission. We also want to note that we have a Patreon facility, information below. This facility enables you to get kind of quality information on investing and trading every day, rather than the 3 times a week that we present on our live show. And we also have some other training materials, etc., that are attached. So what I wanted to review today is that sort of after you see the incredible trading we've seen from Tesla for the last couple of days, you start to wonder, well, wait a second, kind of what's going on here? Why is it going on? And what does it mean? So I first want to start with the whole concept of, well, what's going on with the Lakers versus the Cavaliers? I'm a basketball fan. I played, basketball in school and really loved watching it. What I was stunned by is when I went to see the Lakers or the Clippers play each other, I was really stunned at how well coached, how well the players knew each other, and sort of the incredible play that I got to see in the process. So I was kind of stunned because one of the wonderments I had was, why is Tesla acting so strangely? And we've been doing a number of shows regarding things like a long squeeze and other things that are going on, but it's rare to see the combination of incredible moves that we've been seeing coming from the stock. So if you think about it, Tesla was at 1180, dropped 43 points, and then after it dropped 43 points, it then dropped another 60 points from, let's say, 1110 down to 1062. And then after hitting that 1062, it quickly sort of did a rebound and ended up the day at 1110, and it's been extremely volatile. We usually have, as of 3 weeks ago, we would have a 30-point on average movement per day. Now, on an average per day, we had moved to about 50 points, but now we're in this 100-point day movement, be it down 50 or up 50, etc. So I wanted to sort of review some of the incredibleness that's going on here and some of the possible reasons why that's the case, because the amount of money that's moving in these situations, in my mind, is truly mind-boggling when you look at what's happening with the options and the increase or decrease in prices. So my sort of general idea for this would be that I wanted to invite those. So what we typically do is the first half of the show, we kind of target novices or people who know very little about options trading or the markets. In the second half of the show, we sort of take what we did in the first half and try to make it more intense, because there is a bell curve, and there's some people that don't know anything, and there are other people that are experts and are going to be giving us some great information to add what we're already seeing. Now, I do want to note to you that I really enjoy this show, one, because I get to talk about what I know, but also, two, because there are some really smart people who watch our show and actually will put comments in there that enhance what I know and will enhance what you know as well. So what I'd like is, feel free to comment if it's constructive criticism of what we're talking about, etc. But if it's just an exercise in sort of self enjoyment, I want to say I'll pass on that, only because it holds up space for substantive comments that'll be impactful positively in the knowledge base of everyone involved. So I wanted to note here that the first thing I'd like to do is, if you're sub, let's say 45 years old, and you've been in the markets for a shorter period of time, I'd like to invite you to take some time to read about something called long-term capital management. So what happened is that if you went to business school or or a finance school, etc., there's something called the Black-Scholes model. So I think it's Leon Black and Marvin Scholes created the model that is taught on how options are priced. So I believe Scholes, either Scholes or Black, was one of the sort of founders of long-term capital management. And so the concept for the firm was to get the best academics in the world to that actually wrote the formula that's used for how options are priced. They put them together with one of the best traders on Wall Street from Salomon Brothers and John Merriweather, and they created the firm. And the whole idea was to use advanced techniques of options trading and et cetera, and put very large amounts of capital to work to actually generate great returns for investors based on carefully researched data. And so what ended up happening was that I think they got several $1 billion in funding from different entities, and then they set about creating this firm that would allow them to generate terrific returns based on the quality of manpower from the trading side as well as from the research side. So as part of this, you'll notice that what actually happened is that a bunch of seasoned traders, I want to say on Wall Street, but they could have been anywhere in the world, kind of got together and looked at A, what the firm did, and B, how they were doing it. The other thing that goes on in this process is that when you have a firm like that, they often are required to go to the SEC and list sort of fundamentals. So by looking at SEC documents combined with knowing the people in general, and also possibly getting information like, are you looking at their order book? So if you have access through one of the big firms to see how they're structured, you now know kind of what they're doing. So in theory, because of the quality of the manpower, particularly Professor Scholes, it might have been Leon Black, I don't know, or recall, what ended up happening was that these guys put together their firm, leveraged it up dramatically, and because of the quality of traders on the other side, this firm was basically destroyed. And because they had leveraged so heavily into the marketplace, the Treasury had to get involved with global entities to unwind the firm so it wouldn't destroy the stock market in general. So I thought this was an interesting sort of lead up to our conversation today, because you can actually read details on how everything happened and why everything I just told you is not absolutely perfect. But the general idea, though, is you have some of the best practitioners, the best traders, the best thinkers in terms of PhDs in economics/finance that got together to put this thing together, and it got blown up by great trading. So I bring this up today because as you look at what's going on with Tesla right now, there have to be some questions that come into your mind, like, how can Tesla on Monday be worth $1,180 a share? On Tuesday, it can go from being worth $11.80 a share to $11.10 to $10.62 on the low, and then back up to $11.10, and then yesterday was at $11.30, something in that range. And the answer is the core operations of the company aren't changing dramatically. It just shows that there's a huge amount of options and other trading going on that's moving the stock around. And if you sort of play it right, you might be able to buy the dips and actually make a great deal of money as this sort of Super Bowl contest among the best traders in the world go on, because Tesla is now the leader of the pack in terms of where people want to go to try to make money if they've got skills or knowledge of options trading in particular, and obviously Tesla stock as well. So one of the things I wanted to have you look at, and sometimes you can sort of take things that have occurred and sort of start picking it apart to see, oh, how does this fit together, why, etc. So one of the arguments I would make is what I call the 0-0 rule. So you'll notice that once Tesla got to about 1110 and started sliding towards 1100, there's a phenomenon that I've covered previously where there are a huge number of people that are right on the 0-0, so at 1100, 1200, and I think 1250 or 1150 are also sort of bogeys that are noteworthy. So what ended up happening is that we had a situation go on where as the stock approached 1100 and dipped below, there are a large number of entities that have what are called stop losses. So if you have stock in a company, Tesla in this case, or any company, you can pick sort of major price points where you're automatically sold out of your position, and therefore you don't lose any money in theory than just that number. Now Tesla would draw a lot of stop losses because of how volatile and wild it is and how much money could be involved if you weren't taken out of that position. So what I wanted to sort of concentrate on here is just the fact that watch Tesla's stock price at the 0-0, particularly 1100 right now. What happens is that you have a stop loss, and the stop loss says that you'll be sold out of your position and that trade will occur at the soonest point possible. So what I've noticed about Tesla in general is that if we hit our stop loss at 1100 and the stock's still dropping, it's likely that a lot of people don't end up sold out of their position until about 1090 or below, like 1088 or 1087. So there are all these people that wanted to be sold out at 1100 that because of the volume of selling on that 0-0, in this case 1100, it's 12 to 13 points below the price point before the trade actually occurs. So you lose, an extra 12 bucks per share because of this happening. But if something catastrophic is occurring, it's better to take that loss of 12 bucks than to potentially take a $50 to $100 loss based on not getting out. So the strange phenomenon that I wanted to highlight here is, one, this trend to drop heavily below the 1100 by several points. For smart traders, one of the ways to trade that is that as soon as you do hit that 0-0, in this case 1100, you in theory could buy puts, and as soon as the stock hits 90 or 80, sell out for a nice 50 to 100% return on those puts because of how this process works. So that's the other thing, is trying to develop some of these sort of what exactly happened, why, and are there small areas that I can take some profits. The second thing that I've been watching heavily is valuations. So Tesla has a certain growth rate. So the way you come up with a stock price is multiply its growth rate times its earnings. And this gives you an answer about what the stock price is. Well, what I've noticed that's been happening with Tesla a lot is that, when you're backlogged by 2 years, that's great. The next question is that there are certain entities that I call them out the window bots. So there are, in programming, there's a concept called if then else. So an example here would be, if there's news on Tesla and that news is negative, and the stock price is falling right now, that's what one might call an if then else situation. So basically, if you have this combination of issues that all roll in at the same time, the answer to it is, let's do what I call out the window trading. The bots simply sell everything and then come back, and uh, the managers can determine on new parameters. They could use the computers for that, but they'll determine new parameters to figure out if they want to get back in based on the reasons why they were sold out by the bots being, if you will, invalid or not appropriate anymore. So what we now have is an interesting situation, and there are some interesting questions here. So what are those questions? Okay, let me give you a list of them that I find interesting. The sun keeps changing, hence my position changes a little bit, and it's a great view here, so I'm hoping you're able to get some of that in. So what we're looking at right now is the fact that, well, what if a whole bunch of firms know where the stop losses are, number one? What issues might trigger those bots to sell everything, right? And so there becomes this game that starts to develop where there was an article and a well-known piece that came out where it was just looking at how all of this worked. But the interesting thing is you can see all these battles going on in the marketplace, and the outcome of that can be known or unknown. So the one thing that I'm presenting today is watch 1100, 1200, 1250, 1150. Those numbers are significant, and we've discussed it before in full-blown shows. The other thing that I wanted to look at here to add to the pile of discussion is this whole issue of a long squeeze. So if in fact, let's say Tesla stock price is falling and it falls enough, what would trigger Vanguard's computers to say, hey, Tesla's market-weighted position in the S&P has just changed. So we now need to reduce our Tesla exposure based on the fact that their market cap is smaller, and therefore there should be a change that's appropriate in this process. So the next question that pops up is, if the stock pops up instead of being down, wait a second, all those computers that were on a negative run to get rid of, all of a sudden are saying, hey, we have to get more, Tesla's market cap has risen again, so now we have to go back in and start buying again. So one of the things I've noticed is something that I'm calling turbo trading. So all of a sudden, the stock price rises or falls, and then all of a sudden it'll go from, oh, you actually just, the price rose, and now it keeps rising because it rose. Why? Market cap is bigger. So if it's a very small movement, 3 to 5 points, 10 points, nobody has to worry about it. If it's 100 points, those are the kind of numbers that really force a whole bunch of entities to either buy or sell based on having to get ready to re-weight themselves against the S&P. So very large moves up or down can result in large moves up or down is another interesting phenomenon. So I wanted to, in this show in general, introduce the idea that, hey, Tesla stock price is moving around a bunch, number one. Number two, with the right news, obviously it could be negative, but it can also be extremely positive. And this is why I was sharing that, you might want to sell some puts, you might want to sell some calls. There are other techniques you can use other than buying puts, but I did point out in several shows that I really felt like carrying 3 to 5% of your portfolio in puts is not a bad idea when Tesla is at or near its apex. And the reason is, you just saw 200 points in one day down for Elon and other reasons is a no-brainer. So, but in the meantime, you kind of protect your portfolio and get some cash back if there's been a bunch of cash removed from your account based on sort of how this wild trading is going on. So over the next few months, we're going to start seeing a bunch of articles about, oh, this firm or that firm had this technique. It never fails whenever I do shows like this about trading, because I'll get a note from someone that says, oh, by the way, is it illegal? Yeah, in some cases it can be, but usually not. The second comment I always get is, could someone please send me an email telling me everything that the major firms are doing and revealing all their trading strategies? Well, there's a little bit of an issue, which is those trading strategies potentially generate billions of dollars in returns. So the idea of please send me an email with exactly what strategies are going on ain't going to happen from the big firms for a couple of simple reasons. And one is some of it might be illegal and it hasn't been outlawed yet, number one. And number two, it's taken a lot of research, et cetera, to deliver first the logic and then B, the implementation of these processes. So, and C, there's also things like artificial intelligence. There's all these games going on with computers being part of this whole deal. So, yeah, you can see it happening in the price movement, but most of the people who are doing it are sitting there making money off of it. Therefore, unless you pay, it ain't happening in terms of you finding out everything that's going on until it's way late beyond what's occurred. The one thing we can say now, though, is, hey, Tesla's in a 50-point-a-day movement for the stock price. I mean, I think it'll mellow back to 50, but right now it's at like 100 points a day. Might be 50 up, 50 down, and then someplace in the middle, but that's a heck of a lot of movement. And one of the only ways you make money on options is by delta, or movement of the stock price. So if there's no movement for the stock, or very little for one stock, traders can't make money there, so they have to go over to places where there is movement, and that's where the money is going to be made. Therefore, that's why they're there. So I wanted to review what's going on, because I believe there's going to be continue to be volatility. I really think that an important day for Tesla is going to be the end of the month, like the 30th, because of a concept called window dressing. What that means is that if you're an active manager, and I keep saying the S&P, but it could involve all these different funds, they, on a periodic basis, their investors want to see what's in their portfolio. If they miss the window on certain stocks, they can go ahead and just say, oh, we're just going to buy a bunch of that stock right now. And our goal from this is to say, yeah, we were in that as it was moving up, or, we're weighted properly. But sometimes you can actually see that they have below average returns, even though they do have the right instruments in their account. And that's called window dressing, where, hey, you stayed away from getting into the stock for legitimate reasons, but you still have to be market weighted in a certain way, which you may not be, and so therefore you have to clean up your portfolio. And when they're trying to clean up at those periods, you have other people that know they have to clean up their portfolio, and then will go after them and try to bury them in the process. So this is another of all these different things that can be going on. So I wanted to mention one last example of of how trading might work that's interesting to watch, and that is there's a company called SAC Capital, Stephen A. Cohen Capital, out of Connecticut, and they pay a lot of really smart people to come in and help them make money as portfolio managers. There's a portfolio manager who came up with this really cool technique, which is when you're, let's say, the New York Stock Exchange, there's certain people called market makers, and their job is to make sure there's an orderly process buying and selling stock. So there was a technique that was developed where they would figure out what the inventory of stock was that was held by the market makers, and once that inventory is exhausted, the market makers had to go buy more shares to help maintain an orderly market. So SAC Capital came up with this really cool technique where what they would do is go in and buy enough shares to go beyond what the inventory might be of the market makers, and then hang on to those shares. And then when the market makers had to go back into the marketplace to buy more shares to maintain orderly, they could guarantee themselves a certain amount of return. It might be small or it could be very large, but in essence, they were playing the game of abusing the market makers as a profit-making method. So I give you an example of this because think of all the things you see happening with Tesla stock price right now. There are seasoned traders that are making a killing. There are other people that are getting slammed and losing a lot of money. All of this is occurring, but because you're in the Super Bowl with Tesla, the largest, the most important trading entity out there, you have to be in it. And while you're in it to win it, all kinds of techniques are now free game, like find ways to manipulate the stock up or down. As I shared, the 0-0 plan, there are all these different things that are out there. And there are a whole bunch of different entities with different agendas that are rolling through. And as I see the stock drop into the 1060s, heading towards 1050 and stuff, I just keep thinking about the fact that, man, the value investors have to love it when we're getting towards 1050 or sub 1100, because you're getting Tesla at bargain prices. And the only question is, how long is it going to take for people to start buying it to get it back up, because it's dropped to such a bargain zone. So I just think that, like I said, we're in the Super Bowl. We're getting a chance to see the best traders in the world in large firms, or former executives there, out there trading and making a ton of money and moving money around in large amounts. I guess my final note would be, man, so think about this. When Tesla was at 1180, I don't have to look at it. There's something called an 1100 put that was selling for about $1,000 one day. And then when the stock went from 1180 to 1062, that $1,000 put was now selling for $5,000 to $6,000. And that time frame was only like 2.5 hours. So those are monster type returns for relatively low amounts of cash that are driving how and why people are wanting to master this. And if you're interested in making money, you could possibly make some money off this situation as well. So at any rate, we look forward to your comments. And please, if you have hatred comments to share, go ahead and hang on to those. This is a learning environment. And if I, as a firm or as a show, cover the same junk that everybody else covers, there's no opportunity to learn and grow. And you have to take risks in order to gather new information, particularly if it hasn't been written down yet. And people are developing new techniques every day that you can see in motion, and you can understand why it's there, but you can also develop the ability to make money off of it without necessarily having to be the expert on it. So we look forward to an opportunity. Happy holidays to you and your family. And please note, contact us regarding SpaceX shares. We're considering going out and getting more shares, even though we're reaching our limit. Also wanted to encourage you to consider our health tips. Today's health tip I wanted to mention to you is to try to maintain sleep and wake times the same time around the whole schedule for a 2-week period, developing what are called circadian rhythms in this process. We also wanted to highlight we also wanted to note that if you'd like more health tips, etc., please look below. And then finally, best of luck as we close out this week and into next week on trading Tesla. I expect the volatility is going to continue to be crazy, and it's going to take some cautious process to make sure you don't get wiped out if you're trading, but also is a good opportunity for long holders to get in. I still think leaps are really cool, or long-term ownership of Tesla shares, because it's in such a great position. At any rate, have a great day. Look forward to your comments. This is Greg for Teslafaninsight. Tschüss, German, au revoir, French, Lehitro, Hebrew, Hoda, as far as which is Russian, hello, Ni hao ma, Chinese, Konbanwa, Japanese, hey do, Swedish, good day, our friends in Australia, Asante, our friends in the Swahili space, Arrivederci, Signorina, and Salam, Muslim. Have a great day. Bye for now, and thanks once again for joining us. a great day and happy holidays.